On behalf of the Division of Mortgage Lending, I'd like to thank you for viewing this presentation of the Mortgage Broker Seminar that was given on July 11, 2017. The focus of the seminar was to review Adopted Regulations R12015, which established the Nevada Mortgage Servicer Regulations. R12015 became effective January 1, 2016. Also, the seminar covered R12516, which amended NAC 645B and became effective January 1, 2017. Hopefully, as you know, the Division of Mortgage Lending regulates and supervises mortgage brokers, mortgage bankers, mortgage agents, escrow agencies and their agents, covered service providers and their agents, and now because of R12015, we now license and regulate mortgage servicers and supplemental mortgage servicers. Previous to that, mortgage servicers were registered with the division but were not licensed. Just to give you a little bit of history, Assembly Bill 480, known as AB 480, passed during the 78th session of the Nevada Legislature in 2015. Part of this bill amended Chapter 645F to require the licensing and supervision of mortgage servicers. As I mentioned, previous to the passing of AB 480, mortgage servicers were only registered with the division. With the requirement to license and supervise mortgage servicers, the regulation NAC 645F was amended. The main change to 645F was the addition of the section known as the Nevada Mortgage Servicer Regulations. These regulations provide the following licensure and compliance requirements for mortgage servicers and supplemental mortgage servicers in the state of Nevada. In those regulations are the requirement and manner of submission for initial licensure as a mortgage servicer or supplemental servicer, as well as the requirements for the renewal of those licenses. The initial and annual financial statement provisions and submission requirements, establishing minimum net worth and surety bond requirements, establishing fees and assessments for the filing of applications or license renewal or amendments, certain reporting and compliance requirements, as well as periodic examinations and investigations of mortgage servicers, and the cost of supervision and examination. Similarly, in Adopted Regulation R12516, amendments were made regarding mortgage brokers servicing loans made or arranged under their own licenses. Today's presentation will highlight those additions and changes brought about by these two newly adopted regulations. So as you can see, the text on this slide is orange. What I tried to do for clarity is introduce any new regulation or new language in a font that is orange, and then existing language that was already in effect will be in white or black. So if you see any font or any wording in orange, just know that that is newly adopted regulation language. So this particular slide, as you can see, all the information is new. For mortgage brokers licensed under NRS 645B who provide mortgage servicing activity on loans that were not made or arranged under his or her qualifying license, a supplemental mortgage servicer license is now needed. If you hold a mortgage broker license and conduct any of the listed activities for one or more mortgage loans that you did not make or arrange, you must apply for and obtain a supplemental mortgage servicer license. The activities listed are the following. If you, as a mortgage broker, directly service a mortgage loan that is secured by real property located in Nevada, or are responsible for interacting with a borrower or manage a Nevada mortgage loan account on a daily basis by collecting and crediting periodic loan payments, or manage any escrow account, or if you engage in activity that enforces the note and security instrument, or provide any of those services mentioned as a subservicing agent to a master servicer by contract. If a broker only provides servicing on loans that he or she made or arranged under the mortgage broker's own license, a supplemental mortgage servicer license is not required. The mortgage broker still, however, must act in good faith and fair dealing in the communications, transactions, and course dealings with each borrower in connection with the servicing of the mortgage loan of the borrower. Also, A mortgage broker must safeguard and account for any money handled for the borrower and, if applicable, an investor. Follow reasonable and lawful instructions from the borrower and, again, if applicable, an investor. Act with reasonable skill, care, and diligence. And comply with all applicable federal laws and regulations relating to mortgage servicing, including RESPA and TILA. For those mortgage brokers who are only servicing loans that were made or arranged under his or her own license, there are activities that are not allowed. A mortgage broker servicing a loan made or arranged under his or her own license may not transfer the servicing of a mortgage loan to another person unless the person holds a license as a mortgage servicer or is a person exempt from licensing under NRS 645F or NAC 645F. A mortgage broker cannot directly or indirectly employ any scheme, device, or artifice to defraud or mislead a borrower or investor or defraud any person. Cannot fail to apply mortgage loan payments according to the servicing agreement or terms of the note, or fail to properly apply payments to an escrow account, fail to place in trust or escrow account held by a federally insured depository financial institution all money received from the borrower, or fail to account for all money received or disbursed for a trust or escrow account. Quarterly reports are also required for servicing activity that a mortgage broker performs in Nevada, again, for loans that the broker made or arranged under his or her own license. Either the standard MCR or the expanded MCR, if the service loans are Fannie Mae, Freddie Mac, or Ginnie Mae issued, will be used. The quarterly MCR reports will be submitted to the division through the NMLS. There is a link for these forms provided for you on our website if needed, or they are available through the NMLS. In addition, a complete schedule of the ranges of costs and fees charged to a borrower for the activities related to mortgage servicing must be filed annually with the Commissioner. This submission should be included with your yearly license renewal application. This slide lists information relevant to branch offices. Most of it hopefully is already familiar. However, there are some changes brought about by R125-16. So if you look down at the 7th bullet point that's in orange there, it states, if any material change occurs at a principal or branch office, it must be reported to the Commissioner at least 30 calendar days before the change. This is different than it was previously. The previous version of the regulation stated within 30 calendar days after the change. This is a significant difference and should be noted for any material changes that might occur. Some clarifications were made in R125-16 in regards to office closures to include the surrendering of a license along with the closure of a principal or branch office. In addition, specificity was given in that when returning a license to the Commissioner, it must be the licensee's original license. Also, if you look at the 3rd bullet point in the 2nd section, the requirement to provide a listing of loans serviced was added. It states that if the mortgage broker is servicing any loans made or arranged by the mortgage broker under his or her license as a mortgage broker, a listing of those loans and the plan for transferring those loans to another mortgage servicer. Those must be included in the request for closure or surrender. Information for employing or associating with mortgage agents. As you can see from the color on this slide, most of the language in this particular regulation has not changed. However, if you look down at the 4th bullet point, it reads, a mortgage agent who wishes to change the mortgage broker with whom he or she is associated must submit a request to the Commissioner and pay a fee. This particular language changed just a bit in that it used to read a person was responsible for this activity. Now it does stipulate that it is the mortgage agent who is ultimately responsible for making sure that the request is submitted and the fee is paid. In addition, same as always, the mortgage broker would still need to cancel its sponsorship of the agent in NMLS, and the new broker would need to add its sponsorship in order for the mortgage agent to be approved by the division and begin working for a new broker. Just a reminder, although not new information, a mortgage agent cannot originate a mortgage loan until they are licensed and registered with the registry. Part of this process, as I mentioned, is to be sponsored by a mortgage broker, but the mortgage agent also needs to be named as a principal on the mortgage broker's surety bond. All mortgage brokers must keep and maintain at all times at each location where the broker conducts business in Nevada complete and suitable records. The definition of complete and suitable records has been changed with the adoption of R125-16. The definition now states that complete and suitable records means all books, accounts, records, and documents of the business conducted by the mortgage broker which enable the Commissioner to determine whether the business of the mortgage broker is conducted in compliance with Chapter 645B of NRS, 645B of NAC, and any other applicable law. Specificity was given as to the records that would be needed for a loan that is secured by a dwelling or commercial property. The requirements for those records continue to include the real estate contract, escrow instructions, the preliminary title report, the loan application with any attachments or supplements, any appraisal report or any other independent assessment of the value of the mortgage property, any verification of representations made by the consumer on the application for a mortgage, a credit report, any commitments made by the lender to the consumer, including any commitment to guarantee the consumer a certain interest rate or commitment to fund the loan, and any disclosures required by state or federal law. The change brought about by R125-16 not seen on this slide is that there was the elimination of the good faith estimate of closing costs and also the elimination of the uniform settlement statement requirements. Specificity and new language was also given for loan files in which the mortgage broker is acting as the mortgage servicer on loans made under the broker's license. Those loan records need to include a loan history for each mortgage loan upon which payments are received or made by the mortgage broker, which itemizes the amount and date of each payment and the unpaid balance at all times. The original or an exact copy of each note, mortgage, deed of trust, or other evidence of indebtedness and any assignment. The name and address of the mortgage broker or lender, if any, involved in the mortgage loan transaction. A copy of any servicing agreement. A copy of any disclosures or notifications provided to the borrower which are required by state or federal law or regulation. A copy of any bankruptcy plan approved in a proceeding filed by a borrower or co-owner of real property subject to a mortgage loan. A communication log, which documents all verbal or written communications with a borrower or a borrower's representative, and a copy of all notices sent to the borrower relating to any foreclosure proceedings filed against the encumbered party. In regards to file retention, the requirement for having hard copy paper files for a period of 1 year was removed. Brokers may now retain records of all his or her completed mortgage transactions in electronic format. The time period of retention remains at 4 years for completed mortgage transactions. For those mortgage applications that were denied or withdrawn, the regulation remains the same. A broker must retain those applications for a period of 1 year or as otherwise required by federal law. If a broker is maintaining records electronically, the records need to abide by the following requirements. They need to be maintained and made available to the Commissioner or his or her designee in a software format that allows for complete access to all records. Have the ability to be downloaded and printed from all office locations of the mortgage broker. This is for any and all records maintained in electronic format. Be provided in printed form within 24 hours after a request from the Commissioner or his or her designee. Be maintained on a medium that 1. Is not erasable, 2. Does not allow changes to a document stored on the medium, 3. Is consistent with the minimum standards of quality approved by the National Institute of Standards and Technology of the United States Department of Commerce or the Association for Information and Image Management, and 4. Contains written authentication identifying the electronic record as an exact, unaltered copy of the document which the record purports to be. Adopted Regulation R125-16 included some slight changes in regards to usable names for advertising and conducting business. Please note that a broker cannot advertise or conduct business as a mortgage broker using a name other than the name approved by the Commissioner. and indicated on the license or certificate of exemption issued by the Commissioner. For clarity, the regulation used to state approved by the Division. The new regulations specify that it is the Commissioner's approval that is needed. Again, regulation is specifying that advertising must match the complete name of the mortgage broker or mortgage agent that appears on the mortgage broker's or mortgage agent's license. This includes advertising on the internet. Another change in regards to any advertising, including advertising on the internet, is that both the broker and the agent should be identified if applicable. Old regulations stated it could be the broker or the agent. Now it does need to be both when applicable. New to brokers with the adoption of R125-16 is the annual supervision fee. As it states, it is a once-a-year fee for supervision that is based upon the annual volume of loans reported to the Commissioner. If you look at the bottom box, you can see that the annual volume of loans reported to the Commissioner is what determines the assessed fee. If that volume of loans reported to the Commissioner is less than $10 million, there is no fee assessed. If the volume is at least $10 million, brokers are assessed a supervision fee of 1/2 cent per $1,000 of the annual volume of loans reported to the Commissioner. To put the scope of this fee in perspective, here are 3 examples of the assessed fee for supervision. Looking at example 1, you can see that a reported annual volume of $9 million would not be charged a fee for supervision because of course it is less than that $10 million minimum amount. Looking at example 2, a reported annual volume of $10 million would be charged a fee for supervision. Again, doing the math at 1/2 cent for every $1,000, you can see that the fee would be $50 on a $10 million volume. In example 3, a reported annual volume of $55 million would be charged a fee for supervision, again, based on 1/2 cent per every $1,000. And so that calculates out to a $275 fee. There is no special report for brokers or bankers to submit to the Commissioner for this fee. The fee is calculated based on the loan volume totals given in each monthly activity report, the MAR report, submitted monthly by each licensee. On or near April 1st, an invoice will be sent either through the NMLS for those licensees registered, or the invoice will be sent through the mail for those licensees not registered. The invoice will be based on the previous year's annual loan volume. Payments must be made to the Division by April 30th through the NMLS for those registered, or directly to the Division for those licensees not registered. Late fees will be assessed for payments made after the April 30th deadline. A penalty of 10% of the fee plus an additional 1% of the fee for each complete month or portion of the last month that the fee is not paid will be assessed. Late fees will be billed and collected the same way that the annual fee for supervision is billed and collected, depending on if a licensee is registered in NMLS or not. The Division will try to give each licensee a courtesy reminder of the fee around the end of the first quarter. At that time, a broker could visit the website and use the calculator link that we have on the mortgage broker page. From that calculator link, you just put in the amount of your annual volume, and the calculator will go ahead and tell you what your assessed fee would be based on that amount. The definition of a change in control was added in Section 20 of the adopted regulations R125-16. It states, a change of control is a transfer, sale, or conveyance of outstanding voting stock or ownership interest in a mortgage broker that will result in the cumulative transfer from the date upon which the license of the mortgage broker was issued of 25% or more of the outstanding voting stock or ownership interest in the mortgage broker. A time frame was also added that says at least 15 days before a person acquires stock or ownership in a mortgage broker as a result of a transfer that constitutes a change of control, the mortgage broker will need to apply to the Commissioner for that change of control. For your convenience, the application for change of control form is on the MLD website, along with additional forms that need to be completed in this process. In regards to examination fees, as you can see on this slide, there is no orange font in the regulation wording, which means that there really has not been any changes in examination fees. But I did just want to point that out that with the addition of supervision fees, please keep in mind that there have been no changes in examination fees. The billing rate of $60 per hour for any examination does still apply. And also note that examination fees must be paid within 30 days after the date of the invoice, or a late penalty will be assessed in the same fashion as it is for a late payment of the fee for supervision. There is a change brought about by R125-16 that may affect the renewal of a license. If you look down, about halfway down the slide, it says, in addition, there must not be any fees, fines, or assessments owed to the division or the state of Nevada. This means that if you owe any fines out there to any entity of the state, you will not get approval for the renewal of your license until those fees are cleared up. A good way, if you owe any fees outside of the Division of Mortgage Lending, a good place to contact would be the Nevada State Controller's Office to inquire about those fees and get those cleared up. Our website is a great resource. If you're not already aware, the address of our website is www.mld.nv.gov. And this is just a brief little screenshot of our homepage. And I wanted to highlight 3 links that you'll find there on the right side of the homepage. The first one is the MLD Updates link. If you click on this link, and I recommend doing it kind of on a regular basis, that link provides you with important information such as memorandums from the commissioner or updates on pending legislation or workshop announcements. Going a little further down, you're going to see a link to statutes and regulations. All of our statutes and regulations that we oversee are linked to this particular page. We also link any adopted regulations. So the 2 regulations that we've been going over today are located under that link, and you can read those for yourselves. And then finally at the bottom, you're going to see a link to brochures and presentations. This is a great link if you just kind of want to find out some general information. I do send out a welcome email to all new licensees each month and ask them to view a presentation for new licensees. So if you haven't yet viewed that and you want to take a look at it, it does have some really useful information. So I encourage you to do that when you get a minute. Okay, this was the point in our seminar where we ended our PowerPoint presentation and attendees took a quick break to submit any questions that they had for our panel. We did have a panel come to the seminar and field some questions. Our panel consisted of 2 of our supervisory examiners and also our CPA. So what I did is I highlighted 4 of the questions that came about in the seminar. So beginning with our first submitted question, it was, in regards to the supervisory fee, will I be assessed a fee on a commission earned for a loan that I referred to another broker? And the answer given by one of our supervisory examiners was no. Only closed loan activity will be part of the annual supervisory fee. Referral fees are in relation to non-federally related mortgage loans. Federally related mortgage loans are prohibited from such acts under RESPA Section 8. The second question submitted was, are supervisory fees only assessed on Nevada loans? And the answer is yes. Only loans securing a dwelling or real property located in Nevada will be included in the annual volume of loan amount used in the supervisory fee calculation. The third question, if the commissioner must be notified of a major change 30 days in advance, how do we handle notifying the commissioner if our QE quits? Well, in Regulation R125-16, Section 19.3, on the date a qualified employee ceases to be the qualified employee, a broker has 30 calendar days after that date to designate another qualified employee. So this particular situation would not fall into that major change 30 days in advance category. And the last question submitted that we're talking about today is If a mortgage broker and a real estate broker share office space, is a separate entrance needed for each business? And the short answer is no. A separate entrance is not required. And I'll just kind of go into a little bit further as to what the regulation says. Per NAC 645B Section 32, a mortgage broker may share office space with a business licensed real estate broker if the following conditions exist. There are 5, by the way. 1, each business has a separate and distinct office space and signs such that a reasonable customer would understand which business he or she is transacting with at all times. 2, each business operates as a separate legal entity. 3, each business maintains separate accounts, books, and records. 4, each business maintains separate licenses. And finally, the businesses are subsidiaries of the same parent corporation or are otherwise affiliated businesses. And with that, I'd like to thank you for your time in viewing this presentation. If you do have any questions, please email the division at mldinfo@mld.nv.gov. Thank you.